All right, I've welcome back for the episode of Carnivore Trades. Today is Thursday, June 1st, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, before we get into it again, so that offer is now live for the courses. So 25% off both of them or 30% off of bundled together. So promo code bundle, Flash 1 and Flash 2. Lots of great information. Just ask anybody who's taken them and they can attest to the knowledge that's in there, calling market tops, bottoms, etc. Basically everything I know. Lots of info on there on cycles as well. But anyways, let's get into the markets today, and that will be running for 2 weeks, so till the 15th. So if you want to get in on that, jump in now, as we're running a little flash sale. But anyways, let's get into the markets here. So Spider's up 1.15 currently. It's about 3:20 p.m. We're just kind of floating higher right now. Triple Qs are up 1.5, and the Dow is up 66 basis points. The Russell's hanging in there pretty nicely as well, finally up decently, 1.33, so 1 1/3. Still not a great pattern here on the Russell, but markets are holding up, and we had comments today, some more Fed governors coming out talking about a pause, and obviously markets are liking that. Now, does that lead us into something going into the Fed meeting now? Well, it's now expected to be a pause there. So, logically you'd think that if we continue rallying, it would be a sell the news. But you know what? This market's holding up really well, and it's just defying gravity here. A couple of things I want to talk about today are the VIX. So the VIX back down below the 16 handle. So lots of hedges coming off here. At the same time, we have skew, and I'm going to use the weekly just so we can see it better. Skew back above 158, so we're now back above the December highs in skew. So it's just amazing, right? There's a ton of risk in this market, but hedges are coming off at the same time. What can you make out of it? Well, we do have a target here still of about 425 on the spiders, so that's kind of what we're looking for. We do have this rising wedge here, but you know what? If the volume remains light, and they just keep gamma squeezing calls, 0 DTEs. I mean, they're just pounding them. Look at this. This is gamma squeeze, big tech, and typically Thursday, Friday, we see a lot of that, especially on Fridays lately. We've been seeing those big tech gamma calls. But as long as they continue doing that, you can kind of negate these patterns. Again, a lot of the time we look for a break of the rising wedge to the upside before a reversal. We'll see if that happens here. My guess is I think we do get to 425. One of those reasons is you've got Apple here that's just shy of 180, and the all-time high is 182.94. I think they close us at an all-time high on Apple before any sort of correction here, and that may even coincide with a lot of people are looking at kind of this gap here on the Qs. It's not that far away, around 360, so that may coincide with that level on the triple Qs. But much like Nvidia, right? So we gapped up to 385, whatever it was, 385, 390. And I said, look, this is probably going to want to pierce that 400 handle, and it's probably going to want to even go a little bit higher because they got to get it to $1 trillion. They got to get it to a whole round number of 400. It's just what markets like to do here. So I think that they'll probably try and push Apple to an all-time high here. I think we're at FOMO levels now, but if Apple hits an all-time high, that's going to be all over. CNBC will be relentless. That's for sure. So I think there is probably some more upside. And again, we've had that 425 target for a while. We got rid of we filled that gap now. We pulled back, put in a higher low. So we don't really care about the gap anymore. And we're basically through that right now, essentially. So here's your high, 422.58. We're at 422.60 right now. So spiders are hanging in there. So 425 is really the next level. I know everybody's going to look at the double top, but there's a pretty good target there. And that's the inverse head and shoulder, which I haven't talked about a lot recently, but it's there. And we just take that head and shoulder and just do this. And you got your measured move. So for a while, I wasn't sure if it was going to play out. And then that takes you right up to about 425 and change. It's a stone's throw away here. For a while, I was thinking it wasn't going to play out here just because of the amount of time it's been taking. A lot of the time, time matters more than price many times. And we were stuck at 410, 415 for a while. Look how long it's taken us to move 5 points, 10 points on the spiders. Now, obviously, the triple Qs have done much better here. Still into a pretty heavy resistance zone with that 618 from the all-time high. But you know what? If they keep the volume light, there's nothing to say they can't take this up a little bit higher. I just think that right now, you know, you're approaching FOMO levels. The VIX is showing a ton of complacency. Skew is showing that there's a lot of risk. We're into a lot of resistance, or we're close to resistance on a lot of things. We have, you know, the Dow transports I talked about this morning. They kept hammering on that lower trend line. Yes, got to bounce off of that, but I mean, this has been signaling problems for a while. And the Fed's pausing. Why are they pausing? Do they know something's coming up down the pipe here? Just a couple of things to think about. But right now, markets are holding up, and you know, you got to respect it here in the near term. So we'll look for 425 probably tomorrow. I don't see us reversing on a Friday. It's very, very common. You know, if you're up Thursday, you're going to be up Friday, or at least flat. And likewise, if you're down big Thursday, you're generally going to be, you know, down to flat on Friday. You generally don't look for reversals. We do have the jobs number though, so we'll see what we get there. Maybe that could cause a little bit of volatility. We could get a gap down, but right now we're kind of in a buy the dip environment, unfortunately. So that's just the nature of the market here. And yeah, we'll look for that level there. Triple Qs, we talked about that 360 level. IWM, I still don't have this getting much through 180 to 181, if it even gets there. So again, there's that trend line extended out here, and this has not been, a leading asset either way, but you know, it's hanging in there, and you still have lower highs. I mean, there's nothing really much else to say. Just been underperforming for a while, and this is, we're in an environment like I just talked about skew, just talked about the VIX. When I see that, and I see the Russell underperforming, I see transports underperforming. Usually, it's like a screaming short. But you've got, they're just holding it up with big tech, and you're getting the gamma squeeze, you're getting those calls coming in. And because of the way market cap works, they're able to keep the whole indice up. So just be careful here. Dow here, trying to get back above the 331.45 psychological level. It's basically above that right now, or hanging right in there. So if you get back above that, maybe you can get back up to 336 in the near term. So that's a good point of control. If it stays below that, though, this could be setting up a bear pattern for a move down. So the Dow definitely showing laggardship here. UNH has been hit over the last couple of weeks, but got a nice pop there, and that is the biggest component right now. So that's helping out the DIA. All right, over to the semi. So the semi is getting a nice bounce off of that basically 144, 145 handle. Still a pretty good reversal there, and there's lots of volume coming in. So I just still see a lot of supply right now on the SMH. But you're getting a little bit of a bounce here. You look at NVIDIA, that's up, 5%. So basically, mostly erasing yesterday's move. AMD having a nice pop, although that's still well below the highs there. Applied Materials has had a big run. Avgo, that's still, I still think there's a huge top in place on that. That's just a massive tail on massive volume there. But, some of these semis getting a little bit of a bounce. But look at just look at the volatility at the top here. This is you're talking about 128 to 151 in 3 sessions, and then 151 down to 145 in 2 days, and then right back up here. So lots of volatility at the top. I think this is trying to find a top here. They do look extremely top heavy, and we're into a ton of resistance. But again, if they just keep pounding those calls, it's going to keep, this kind of underlying bid. And by the way, speaking of underlying bid, the Treasury is now pushing back their TGA issuance, or their debt issuance, because the debt ceiling took so long apparently to get through. So that may be delayed. That kind of liquidity grab may be delayed here. So that's another thing that's going to kind of keep this market afloat here in the near term. Will that change eventually by the end of the month, by the second half of the year? Yes, absolutely. But right now, they're holding it up. So that's all we can do with it. IGV holding up well, up 32 basis points currently. No real problems. Kind of just looks like the triple Qs. It's just very extended. Like everything else, going into a lot of resistance, but it's above that 100-week moving average. So you got to give it the benefit of the doubt for now. Dow transports we talked about. Can this break above this upside wedge trend line? Yes. And you could say, well, it's a laggard bull, so it's just going to break out. But it's not supposed to work that way. That's my issue with it. The transports are supposed to be leading. They're not supposed to be lagging. So just be aware of that. but it's holding up okay. If you get back above the 200 MA, you know, maybe you can get to 14,250, and then we'll talk about it from there. But if this breaks down, obviously not a good sign here, and there's really not much room left. It's got to pick one way or the other here on the DJT. All right, so bonds continuing to get a bid. Despite the jobs data this morning, I think a lot of it's just kind of short covering. Maybe it's a little bit baked into the cake. It does look like the market likes better news right now. Again, I think the market, like I said, has been worried more about recession than anything. So good, decent jobs data is actually okay because the Fed's saying that they're going to pause, right? So if the Fed's going to pause, that means good jobs data is no longer going to be conducive to the Fed hiking rates, essentially. That's the thought process. I think the market's way ahead of itself here. And looking at the 2-year, yes, it's backing off here, but this is just consolidation. This is just backing and filling. You could easily put in a higher low here and push higher. So the market's banking on this theory that rates are going back to zero. The Fed's going to do QE at the first sign of a recession, and I do not believe that's going to be the case. So I believe inflation is more secular than cyclical, but right now we're in a cyclically, deflationary period, or I should say disinflationary period. But in any case, 10-year TNX here, again, pulling back, does have some support around here. That's where you broke out from, so it did get a bid off of that. Again, to me, yields are just doing a big picture, big, fat bull flag. So again, when that 20-month moving average catches up on these, I think a lot of people are going to be surprised here at what can happen with yields. Anyways, let's get over to home builders. Home builders getting a bounce, holding the 50 MA. There's the XHB up 1.5. I still think this has to go down and at least test 68, maybe 67. You do have lower highs in place, but if you get back above the 20 moving average, you can maybe negate that. ITB, this probably needs to go down and test 70 to 71, but it's getting a bid off the 50 MA. Again, same thing kind of goes for that in regards to the 20 MA. VNQ holding up okay, getting up 0.25% here, but still weak name and really a market leader to the downside. XLF getting a bounce today, still below those moving averages. We'll see if it can close back above. Every time it tries to get back above these moving averages, it just puts in another lower high. And on the weekly, it's struggling to stay above that 200 MA, and it's really just kind of consolidating here. I think bearish inside bar on that 200 MA. So if it starts to break down, obviously going to be an issue for the financial sector. Maybe the Fed pausing. Maybe they know something's coming. Maybe that's what the charts are trying to tell us. Let's look at KRE. That's holding up okay. Again, this can still get a ABC up into the 44 handle. I can't rule that out. The pattern's okay. It did take a little bit of a hit yesterday, but it's still, it's still sideways and it's still fine. So I just don't really see much more upside past that, but it's holding up okay. There's KBE as well. Maybe that can get to 37.50 to 38 on a continuation up move. And then broker dealers again, 460, 200 MA right in that area. If we, and that's holding up okay. So that can probably do that as well, assuming the market holds up. All right, crude got a nice bounce today. It did come off the highs though. The important thing is, I've been telling you about 68. It held that, so that's important now. And 70 is another psych level that we have to hold, and it's also that pivot low going back to all the way back to December. And we're basically right on that. If we go into the intraday, look at where we went, and now look where we stopped here. So you get a daily close below that. It's definitely weaker. If it stays above that, it's a slight positive, but it's just hard. Like you got lower highs now. We talked about this yesterday. We get the trend lines there. You have kind of like a little bear wedge, and it broke down, right? So we could easily come up here, test that 20 MA, which coincides with this lower trend line, and roll back over. So just be careful with crude here. I'm not doing anything with it. I don't love the pattern. Not enough for me to even do anything with right now, but at least it did get a bounce today. So watch that 70 handle by 5 p.m. If you close back above that, it's a slight positive here. In the near term, I'll close below that, big red flag. XLE up 1.5, still weak, lower lows, lower highs. I don't love the pattern. This needs to go lower. XOP, same thing, trying to hold this little trend line here in the near term, but I don't love that pattern as well. OIH, big pop. So OIH getting a good pop here today, up 5%. So they're saving it. We talked about this yesterday. They could close it back above. They did. So nice save there For the OIH, look at the big surge here intraday. It's holding up well. We'll still watch this, though. If you could easily put in the lower highs, so just be aware of that. Nat gas backing off as well. Take a look at this channel here that we've got now. So from the April 14th low, May 5th low, and now look at where we're hammering into. So we'll see what that does tomorrow. Typically, Fridays have been a good day for nat gas. We also get the rig count. So we'll see what that does here. But if this puts in another higher low, this has a pretty good setup here with a higher high. So we'll be watching nat gas, but that did get hit as well as, most of energy has been lately. All right, over to the dollar index. I always lose my DXY chart. 103.50. So getting hit a little bit here today. I don't have a problem with this, though. So I would like to see this do more backing and filling. Again, Fed saying that they're going to pause. It's going to bring yields down. It's going to bring the dollar down a little bit. That's expected here. But, you hold these moving averages. You backtest 102 or 102.85, 103. This can easily, there's plenty of room for a higher low here. So no problems here with the dollar index, but it is getting hit a little bit, and that is somewhat noteworthy. Noteworthy. All right, back over to gold. So gold obviously getting a bid. Fed pause makes sense, right? Up 0.75%, stalling out at the 50 and 20. So daily chart still under a little bit of pressure. Weekly chart I still think is fine, right? So you have a nice kind of, it's not the best. I don't like this rolling top kind of look. I hate that, but it's holding the 20-week moving average, and until it breaks that on a weekly close, I can't really say anything terrible right now. But that's where gold is at. Daily chart a little bit softer. Silver getting a nice pop. That'll have some resistance at 24. Bigger level 24.50, right? So there's your pivot low. Coincides with all these pivot highs. We just draw it in. All right. So right around 24.50, 24.60, 50 MA, right? So that's a good area of resistance for silver. 20 moving average might give you some. You got 24.25 right there, so could get hit. But obviously silver getting a pop. Like all the other metals, platinum up here, up 1% on the day, a little bit of a dead cat bounce there. I still think that needs to go a little bit lower. But again, I still like that on the bigger time frames. Palladium getting a nice pop here. I'd like to see that pierce double bottom, honestly. But again, very attracted to palladium right here. Just looking for a good entry. Copper stalling at the 20 MA. Again, we talked about this level and the 20 moving average. It's, got a nice bid, but came off the highs. So we'll see what that does tomorrow. If it consolidates, you can make an ABC up. So it's hanging in there for now, and we'll leave it at that. All right, over to Bitcoin. I noticed my Bitcoin chart here in the corner of my eye here is dumping a little bit on the intraday. So we're taking a little bit of a dump here in the afternoon. Market's closing in about 30 minutes, although Bitcoin will continue to trade, of course. We talked about this yesterday, 26,836, spot 12. And we're at 26,800 right now. So watch that level. If we close below that, that's a big negative for Bitcoin. It probably takes you down to support here. So again, the longer you build this bear base here, the worse it is. Again, still have to say the weekly is fine for now. But you take that out, it's going to be less and less of a probability that we move higher. You take out the 20-week moving average, it's done. So that's the way I'm looking at it right now. But watch that into the close tonight at 8 p.m. If we're below that, it's a big, big negative for Bitcoin. All right, let's get back over here to the spiders. Let's take a look. Oh, nice dump into the close. So a little bit of a sell-off here. And take a look. So where did it stop selling, or where did it stop buying? Right at the rising wedge. So, okay, so maybe the levels are coming into play here for once. And we're getting something going on here. Perhaps just too many calls being bought into the end of the day. Certainly could be the case, but we are seeing a reaction here off the level for a change. So markets coming in off that rising wedge trend line, and then the Qs here now up just 1%. So that's down 0.5% here in the last half hour. Still up big for the day here, but interesting stuff here. So VIX coming off the lows, maybe finally a little bit of protection being bought, and it's just miraculous to me. The skew at 158.30. You're above the December 2021 levels with the VIX at the 15 handle. So to me, there's a lot of risk with not a lot of protection being bought. But again, they can hold this up longer. A nice little dump here into the close, or close to the close, but we'll see if that amounts to anything. Could just be some profit taking. Again, maybe the algos, the algos, they know these levels too. So you could be getting a dip off of that. But until you get some real volume and like a real catalyst in this market, they can keep buying these big tech calls and keep holding the market up. When that stops working, it's going to be fast and furious to the downside because you have a bottleneck, right? Everybody buying calls on the same things. A good analogy would be a building, those maximum occupancy numbers, right? The fire department puts up. If that says 100, but you have 300 people and there's a fire, 20 people are going to get out, 280 are going to burn. So just be careful here. I mean, we're very concentrated in a few stocks, AI stocks for the most part, as you guys know. But again, it's going to need some type of a catalyst and conviction here on the downside. Anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. Don't forget to take advantage of those course coupons. Remember, Flash 01, Flash 02, and Bundle for both of them, 25% off both or 30% off of the bundle together. Anyways, guys, you guys take care. I'll talk to you all tomorrow.